Good morning, everyone. It is Thursday, September 2nd, and this is Nadex Morning Analysis, where we look at some potential opportunities in the markets for the day. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, so not a lot going on in the markets today, but there are some things that we want to cover. First up, I just dropped a chart of gold in here for you to take a look at. You know, if I did this to you, can I do this? I'm trying so you can see where it says gold. Gold, this is a chart of gold for the week. And outside of that little drop on Tuesday, it has been very much range bound. So, and it's actually right now touching the bottom of the range. And in fact, it bounced right off of it. Can you believe it? That happened right as we started, literally a minute ago. So we want to talk a little bit about this and how gold is touching some certain areas where buyers step in and where sellers step in could create some trading opportunity for you. With gold, we're going to also look at the Australian dollar, the Aussie dollar, US dollar forex pair. They're related a little bit. And then it's going to be Energies Day. We are going to take a look at a setup that we had done from yesterday on oil, but then today Nat Gas has its inventory report, 10:30 a.m. Eastern. And then the only thing I'm going to mention is that tomorrow, heads up, it's the first Friday of September. Before Brian and I go on, right before Brian and I go on, we'll have in the U.S. non-farm payrolls and the unemployment rate. So we'll have to be on our toes a bit tomorrow morning. But for today, let's take a look at gold and the Australian dollar, and then some energies, oil and nat gas. Brian, I'm going to flip it over to you and let you kind of go through it.
Yeah, so as far as 24-hour movements, we haven't seen a ton. The Aussie dollar is about the only thing that's up right now. And again, we've had that Australian news at night. And we actually, there was just an article that just looks like it popped up a second ago that, Australia opening up, path out of recession. So some positive news, but Aussie dollar's up. Really, I would say the things to watch today, we had Spanish unemployment numbers come in, not quite as bad as what they were. Right, the forecast is supposed to come in at 164, and it only came in at minus 82,000. So again, not necessarily bad. Our U.S. unemployment claims came in exactly as expected. Missed it by 2,000, but it's considered basically that's like a rounding error up and down.
Right.
I would say today, as far as gold goes, we have two different FOMC members today, Bostic and then Marcy. I believe it's Marcy. Marcy Daly. Both of them are voting members. Both of them have made comments. Bostic has actually been pretty vocal about it. Daly made comments in early August about how we have an ultra accommodative, so kind of like almost being a little sarcastic with it. She had originally said earlier, she's in favor of tapering later this year, early next year. So not the most extreme, but many of them have changed over in the last couple. In the last couple of speeches. So again, it's been a month since she made those comments. So she is also on the tapering needs to start somewhat soon. And again, it's kind of taper now, taper in a month from now. She would probably jump into the thing. But again, two voting members today. The reason why that's important is because if either of them makes any type of a hawkish statement, mentions inflation, controlling inflation, seeing inflation higher than expected, it may not go down as much as we thought it was going to go down. Those are all hawkish statements for gold, and we could see gold popping up a little bit. As well as tonight, we have, and again, I mentioned that right now the Australian dollar is up 41 pips, the most of any of the currencies in 24 hours. We have Australian retail sales tonight. So depending on what they say with gold, could provide us and drive us into an area where we have some movement for an Aussie trade tonight. Okay. Now, looking across at gold, you can see gold is kind of boring. If you guys have been watching the broadcast for a couple of days, you know that 1918 is a level we've been looking for. We talked about the formation. We liked it. Actually, yesterday morning, right at this time, is when we hit that level, and it went all the way down to its 1 to 3, and then basically just kind of pulled back and stopped. I mean, since the 29th, we've really been stuck. Here's that area of interest level that I talk about all the time. You can see how much time inside of this channel, how much time it's spent inside of this yellow area. So I would say right now, I mean, it's kind of probed this bottom, area of buyers. The 1800 mark is right below, and I don't know if I did this with you guys or not. I may have done it with my group, but I talked about kind of the measured moves, like the channeling. It's funny how this works out. Here's 1800, and we talk about kind of stabilizing above and below and kind of what channels look like. You guys can see here as I measured down to the bottom. If I move this up top, magically it's the same exact channel, the same width of a channel. And again, it's just kind of fluctuation back and forth inside of just kind of like your standard averages, right? Right now, with what I'm seeing, I do think there's some potential today for a pop, but the way that they keep probing lower, I think if it did, not that the unemployment data this morning was bad, but I think there could be some push down, especially if we don't hear anything out of those two FOMC members. And again, it may actually artificially drive down in preparation for them to say something. But again, watch the level on any type of longs, watch that 18-19 level. And interestingly enough, this actually coincides with what we saw with the Aussie dollar as well. And again, Aussie, if you were here on Tuesday, you can see this level has been here forever. We talked about this touch of a level that, back in the 13th of August, had you guys been watching, or if you attended on Tuesday, we talked about the 73.81. You can see yesterday at about noon, right about noon, 24 hours from when we had talked before, this came all the way back down and grabbed that old level and now is up to the same spot again. So, again, Aussie dollar is kind of riding with gold. You're seeing this pop now because of that kind of coming out of a recession. Aussie's opening back up again, all these positive things. Seeing how it works today, I think, will be very important because, again, that 9:30 release tonight is a big one. Retail sales, particularly month over month. Right now, it's expected to be down, but the question is this going to be that kind of overly negative sentiment where it comes in and it's maybe only, I don't know, maybe it's only down 1.1 or 1.4, right? That's definitely a positive for the Aussie dollar. So, again, first things first, we'll be watching gold for today. And then again, we know we have a higher time frame level. So the way to play this one would be look at your 30-minute levels. And again, I would expect really pretty much right now since the European Open, really since midnight, it's been a straight kind of Aussie strength, dollar weakness situation. Remember, the trend for the last few months has been when the U.S. trader steps online, the dollar seems to get strength, which would be a turn and a rollover point. The question is, do we come all the way back down to this lower level again? Is there a new level form there for news tonight? Are we going to continue to push further and then kind of drive back again? And will we have a reversal later on this evening? Remember, maybe this is not negative enough. Maybe it comes in at a minus, 2.5, less than it was before, but still negative. The market's going to have to adjust, and that could be a big driving force back to the downside. So, if you caught this trade from Tuesday's presentation, and again, Tuesday, we were, let's see, that's 9. We were sitting over in this area here. Actually, let's see, that would have been yesterday. It would have been down in here, right? So again, came up, grabbed it, took off. I think it's very important. Either of those members today could definitely move gold, which again will help move the Aussie dollar around. Remember, the Aussie dollar follows gold. Gold doesn't follow the Aussie dollar. Okay, so just make sure you remember that one. But I think there's some good opportunity with this one.
All right, let's take a look over at those energies. I know that you want to tell a little bit of a story about oil from yesterday, and then
I want to stay from natural gas
today because we do have nat gas inventories at 10:30 Eastern.
Yeah, so let me drop this down to a lower time frame. If you guys remember yesterday morning, we talked about the API release, right? We talked about how API, it was a miss. It was supposed to be 2.8, came in at 4. And again, we always say the API release with a little bit of, grain of salt, right? It's industry specific. They don't have to necessarily give realistic figures, but, again, we'll see what it is. Well, yesterday's EIA number came in much, much worse. Their forecast was supposed to be 2.5, came in at -7, which is a huge down draw, which, again, should have sent this thing wild. Interestingly enough, I told you guys, again, week after week, and if you don't know how to do this strategy, make sure you guys sign up for the next education event. I will be doing nothing but the natural gas and oil news trade setup, okay? What it is we saw this one kind of come down again in the European session. We kind of watched it drop, and then very, very fast at like 8:30, this thing did nothing but just tank. It was kind of like a down scenario, but you can see it did do its kind of reversal where it kind of went right back up, basically closed right where we started the entire session. This was a very, very fast move, a parabolic move to the downside. And we saw stabilization in an area where we had some buyers and dropping it down to the 5-minute. Actually, remember, for news, we will even drop it even lower. And we're looking for some stabilization. By stabilization, I mean sideways movement. It's for today, for yesterday. What I did is I went down here and I was trying to analyze and figure out, all right, listen, the way that it's stabilizing, it's inside of a zone. I like this one. The release was sitting right here, right? The release was sitting right there. When we were analyzing, I was looking at this level, right where that X is. And that was about 7 minutes before the news release came out. I knew the API number was bad. I knew that the US trader shot this thing straight down again. It was set up for a long. So I looked at my binary strikes. I looked at my call spreads. Nothing close. I looked at my knockouts, nothing close. I went across and looked at short duration binaries as well as dailies. Unfortunately, there was a little bit too much in the shorter duration contracts, and I didn't think we were going to be able to get up there that fast. But the dailies basically had the same exact price. So what I did is I looked at the 86.11. You can see here's where the expiration point of it was. And again, it had the same risk as doing a shorter duration. It was kind of right in the same area. So I was like, for the same price, I'll take the risk with the longer. For $25 risk, you can see that it closed well above, right? It closed about 10.15. It was actually up here. You could have gotten out of it a little bit early, but $25 risk. The payout was $100, so it was 75 profit in the other direction. Again, didn't care what the news was. I knew that there was a big drop down. I knew that we were sitting inside of a level, and you can see the immediate push forward right up into a level very, very fast. And then again, we ended the day back up where we started. So parabolic move down into an inventory report. Saw the basing on the news breakout strategy. $25 risk using a shorter duration, or not a short duration, but an out of the money binary contract. So my risk was lower. Price came up. There you go. The reason I'm telling you this, guys, is not to be like, oh my God, I made millions of dollars off this one, right?
The setup was there.
It's the setup was there, and the reality is we have natural gas today.
Oops, and that's what we're so let's take a look. Although we're not getting that parabolic move at the moment in that gas.
And you won't. Natural gas tends to be a little bit slower, but we do have a zone up top, which again, on a 15-minute, we could mark off some zones on that one and talk about it. Remember, the way that you play this one is the release is at 10:30 in the morning. So at 10 o'clock is where you go in and you see where there's levels of stabilization. Here, we can actually see some stabilization up top, which is fine. Again, this isn't like a 10-year high right now because I need gas for the house. It's at a 10-year high. The guy in the spring was like, hey, don't buy it now. It's expensive. It'll get cheap. And now it's double the price. So I'm going to call that guy back and yell at him. Like, hey, I wanted the tank and you told me no. So it looks like I have to worry about that as well.
He can sell it to you for more money later.
I guess. I don't know that he knew, actually. It was kind of like one of those. So. And he's like, listen, I don't want to charge the full amount right now because it should go down, But I don't think he expected the inflation in energy. I think it's I don't think anybody expected the energy inflation as bad as it is. I should have asked him who he voted for. That would have that would have told me would have given me all the information I needed to know.
That's super funny.
But right now, we do have kind of two levels of basing where buyers have stepped in, and these may be what we use, but we're going to have to drop this down to a 5-minute chart and really kind of dial this one in. We can kind of bring it back here, but right now we're sitting between these two individual levels. So you're going to use a 5-minute and a 1-minute chart. You're going to go down there and kind of see if price stops. And by stopping, you're going to see some it almost looks like it hasn't moved. It's like, is it still working? Where you tap the screen. If it's in either of those two zones, it typically is a telltale sign. Does it work every single time? No. Does it work a majority of the time? In my experience over the last few months, oil's done it with inventory reports. It's done it over 75, 85% of the time over the last 6 months. Natural gas has done it a little bit less, but again, when the setup's been there, it's been good. Again, if there's no miss, it doesn't do anything.
Right. But you're taking defined risk. I mean, you're going to have to take risk if you're doing anything in the markets. There are always going to be risk.
Yep.
But it's a matter of minimizing your risk in opportunities where you could potentially see some opportunity for reward.
Yeah. And like I said, I'm taking it out of the money, which lowers my risk because it lowers the amount of money that is put into the trade. But it also makes on the flip side, the farther out of the money, the lower the percentage chance it's going to work. That's why I'm timing it with something like an inventory report.
Right.
Okay. So you can do it with all news releases. It's just, I know that there's typically a lot of movement on inventory days. If you get it out of the money and it comes in exactly as expected and it doesn't move at all, guess what? You're going to lose the money it costs at the end of the trade, including
or you can always
fee.
Liquidate it and just take a partial loss. Right. You don't have to wait until the end to see what happens. I mean, you could get a move and you could buy a low probability. You could buy one that's a 25, low probability, and you get some movement, and somehow it turns into all you get out of it is it goes to a 40 probability. Do you have to sit there and wait
after the news release? You're going to get a volatility crush, so it's not going to be. It's not if you bought it and sold it right away, you had that bid-ask spread difference. If you bought it before, it has a high amount of premium inside of it because of the volatility, the
Right.
expectation. But right afterwards, you're going to have a volatility crush because now there's no catalyst. They know that there's no catalyst. The news event is gone, so it makes it kind of worse on the back end. It's the same thing with traditional options. A lot of people play strategies for news only, not realizing that there is a volatility crush after the news actually came out. So,
But if you're
it's
able to
nice.
take
I'm
it
glad
off,
it's moving higher. I hope that it keeps doing this because I'd love for this to turn and go back down again. If it went down to like $2, I would love it. That would be great. I would fill up like 2 tanks worth of gas just so I didn't have to buy it for 2 years.
I'd even get one out here just for you.
Thank you. I appreciate that. Yes, yes. The pipe. Well, no, they'll never allow a pipeline from there to here. So.
All right. Hey, by the way, before we wrap up today, because there isn't much else to cover, tomorrow I know we've got the non-farm payrolls and the unemployment rate. Anything people might want to consider, just where they might want to be looking tomorrow morning before we go on. Now, of course, we're going to talk about it. It'll be after the numbers come out. Is there something where people should be maybe focusing their eyes? It is 8:30 Eastern tomorrow. Do I have that right? Yeah, 8:30 Eastern tomorrow.
8:30 a.m. Eastern. Yeah.
Any place people should be looking, or other than equities?
I would see what the dollar does a lot. That would be one of the big things tomorrow. Would be the dollar. Typically, non-farm is more associated with currency moves, and it's been quite a kind of anemic week as far as movement goes. I would look to see what happens in the overnight. Remember, the Europeans are they have like the inside track. They are typically moving price in the direction it needs to go, so they can get a better rate when the actual numbers come out. I think the one to watch of these three, remember, the API number on Wednesday was it was horrible. It was like half. They've adjusted the non-farm number down a little bit. 750 is still a big number, though. So remember, if you're watching this, it was supposed to be 640 and came in at 374. The market's probably kind of preparing for that maybe the 750 is a little bit high. But I think what's more important there is to watch the unemployment rate. Again, 0.2% is a big jump. When we've done that in the past, there's been kind of, you see these big jumps. It's a huge difference. And remember, last time the forecast was 5.7, it jumped all the way down again, and now they're saying it's jumping again. So it's like, whoo, unemployment's going great. So it's one of those things. I would say it's set up more for disappointment for the unemployment rate. The non-farm number, again, the non-farm is more set up for a negative release and a surprise to the downside. But what does that do? That could potentially also provide, not a big a drop here, and that's a negative, which could, again, news media is going to be like, hey, we're not as recovered as we thought we were. Everything is bad. And then they're going to say Delta surge and everything. They're going to go down the standard scripted speech. So
for posterity, and we don't talk about these that often, but we actually have event contracts, and you can, they're binaries, right? And you can make a prediction on will the non-farm payroll or the jobless or the unemployment rate. You can take a look at the unemployment rate. Is it going to be greater than or equal to certain numbers? And right now you can obviously see 5 point. There is no chart, so let's get rid of the chart when I click on it, because there's no chart. This is not a price moving. You're actually just making a prediction. Will unemployment come in greater than or equal to the rate 5.2%? And if it comes in higher than that 5.2, it'll go to 100. It comes in lower, it'll go to 0. But you can actually make predictions around where you think the unemployment rate or the non-farm payroll numbers are going to come in. So thought I'd just mention that quickly. But with that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can hit him up at support@keeptradingsimple.com. Again, what we looked at today, we looked at gold being a bit range bound, and it's impacting the Aussie dollar for some potential movement today. If you track the price of gold and how that could potentially impact the Aussie dollar. We did go through an example of oil, but more importantly, nat gas inventory, 10:30 a.m. today. Look for some potential trade setups there. It might be a volatile spot, and be sure to be prepared for non-farm payroll and unemployment rate tomorrow morning. Brian and I will catch you again tomorrow, the Friday before Labor Day. I can't believe it. All right, everyone.
Yeah.
Thanks. I don't know where this year went to. I don't know where last year went to.
I don't know.
It just disappeared.
It's the last weekend before my kids go back to school.
I love it. I love it. All right, everyone. Enjoy your day and good luck in the markets. We'll catch